Hello, everyone, and welcome to Blockchain Versus. I am Christina Brujon, and you are seeing our very first video recording on Blockchain Versus. Today, I have two very special guests. They're actually part of the CoinGenius family. And the first is our head of market research, Mr. Stephen Kwan. And the second is our brand new, brilliant CTO, Russ Wilcox. Gentlemen, would you like to introduce yourselves?
Sure. My name is Stephen Kwan. I've worked on Wall Street and LaSalle Street for 20 plus years in derivatives, capital management, and commodities. Recently, including blockchain and cryptocurrency in the scope of assets that I look at. Met Christina a couple years ago and joined the CoinGenius team about a year and a half ago.
Thanks, Steve. Mr. Russ?
Hi, everyone. My name is Russ Wilcox, and I'm the CTO here at CoinGenius. I have a background in theoretical physics with PhD work in computational geophysics. Undergraduate is from Boston University. PhD work is from University of Michigan in Ann Arbor. I've worked primarily as a data scientist and an artificial intelligence expert and consultant for the past 2 to 3 years, specifically in consulting, with an entire career space of around 13 years, really solving big data problems. I'm coming into the CoinGenius family to help work on generative models and understand how the words we speak into today's society via text message, via news articles, via social media, how that can help inform our market decisions and make a more robust understanding of what current market regimes look like to help better forecast and understand what the dynamics and future behavior might be.
Thanks, Russ. And especially forecast and understand a very complex landscape. It's not just crypto for CoinGenius. It's really how the 24/7 landscape of crypto and the world's open and closes on a global scale interact with that. So we've seen pretty much one of the worst weeks that we've ever seen. Steve, I know that you've mentioned to me multiple times this is worse than the indications that you saw in 2008. And that you're seeing kind of the collapse of this over-engineering of the financial bubble. And on the other side of this, we will have a global economic engine that looks very different than what it does today. Can you tell me a little bit about what it means when CoinGenius says we're in a pandemic market regime?
Sure, I'll try my best to do that. I'll compare first. I'll just start by saying in 2008, actually, in my opinion, began in 2007, where one day you'd see, or I'd see, the Dow Jones or whatever equity indices I'd be looking at drop 3 or 4% very precipitously, and people would ask, well, why? What happened? And you'd hear a goofy comment such as, oh, subprime's a problem. The next day you'd see equity markets reverse, and they'd be up 3 or 4%, and the comment was, what happened? And I would hear things like, oh, they fixed subprime. Once I really understood subprime and spent a few hours on it, I realized that's not something that became a problem overnight, nor is it something that could be fixed overnight. Now, the interesting part about this current market regime, or the news flow regarding the coronavirus, is that this all started in January, where it was first mentioned, and seemingly it was a Chinese equity problem, so to speak. And that said, I'm half Chinese, half Dutch. No, I haven't been to China recently, but it was just the feeling that the US equities could seemingly ignore this. But then it became an issue with the DAX, the FTSE, the CAC over in Europe, and still US equities wanted to seemingly ignore this until all of a sudden one day, really with little warning, the Dow dropped 1,000, and what was the story? Oh, coronavirus is a problem here. And once that happened, a lot of what I know just about technicals and watching markets kind of shifted over to an area where CoinGenius and Russ have more of an area of expertise with data and algorithms, and literally it just hit certain pressure points with many funds and investment firms that I watch or talk to, and you had people going from long to flat to short in milliseconds, and then it was deemed, well, these are safe havens, these are not. And it was, you saw the gold up, treasuries up, Bitcoin up, equities down. I guess in times of extreme stress, pandemics, 2008 type situations, people get what I call the tap on the shoulder. You get a tap on the shoulder from the risk manager. They say, we need to get out of some stuff. We need to free up some capital. I don't have time to pick, well, I'd like to be long Bitcoin and short Litecoin, long Ethereum, long gold, excuse me, long equities, short the CAC, long the, it's simply you're hitting the get out button, the liquidate, and freeing up X amount of capital. And these are the type of markets that I guess we've kind of alluded to, where assets that don't usually move together, when they start moving together, that's when I believe that problems occur. The 2 Fridays ago, we saw gold up, equities down, treasuries up, Bitcoin up, and then come Monday, over the weekend, we had seen Bitcoin and other cryptocurrency assets slide. And then come Monday, it was gold down, crude down, Bitcoin down, equities down, treasuries up. So you still had that one asset that people wanted to hold on to. And this week became, I guess, even more fearful in my eyes, where you finally saw treasuries start to tick down, and not much, mind you. I would just take a note that there was a day a couple days ago where you saw every asset that I follow was down. Treasuries, gold, crypto, equities, crude, copper, corn, wheat. The whole gamut turns red, where just a few days ago, mind you, there were safe havens, but in times of extreme stress, we saw all assets that I follow go down. Then I'll give you my closing statement on today, and I'll pass the mic or camera over to Russ. We saw the NHL close or temporarily halt their season. Major League Baseball, you saw guys in the NBA saying they may have coronavirus. We saw people from the government in Canada saying that family members may have it. And I get a call from the Archdiocese of Chicago that they're closing schools. Then I look, and in the last 15 minutes of trading, the equity markets mysteriously rallied 2,000 points. Does that make sense? I don't know. I couldn't tell you. I'm not in the government, but I don't like to give advice, and I don't like to use absolutes. But when things don't make sense, I will say a couple things. Leverage, for those that aren't familiar with it, can be a tool that cripples you. And I don't use leverage when markets make little sense to me. And like I said, when non-correlated assets start moving together, I become very wary, and I look to others that I respect for advice. And on that note, I will pass the camera to Russ Wilcox.
Awesome. Well, thanks, Steve. So I think to start off, we want to take a step back and kind of understand what we're trying to do here in a sense of artificial intelligence and data science and machine learning, all of these buzzwords that you probably hear every day in your commonplace. So if we take a look like at the stock market in terms of weather forecasting. So if we wanted to pull up our phone and take a look at the weather forecast tomorrow, we might see there's a 30% chance of rain, there's a 30% chance of snow, and there's a 40% chance of sunlight if you're here in the Northeast like me. So how do you develop that? Well, all of those forecasts are relied on measurements and pressure and temperature and all of these different mathematical models to help infer what probabilistically the weather will be like tomorrow. Now we want to extend that premise to what we're trying to do here at CoinGenius in forecasting stocks in general. So our goal is to better understand the dynamics of the problem such that we can have a forecast both in the short term and the long term of what the behavior of any market might be. This is not to say, okay, tomorrow Bitcoin is going to drop to $125 precisely, or it's going to go up to $100,000 precisely. But what we want to try to do is we want to understand the behavior of the system and understand the uncertainty and how certain we are that the system, i.e. the crypto market, in this case, will either go up or down, and the likelihoods around that. So typically what we'll do is we'll look at a whole bunch of different assets, whether that is, Ethereum or Bitcoin or Ripple, and we'd first ask the question of saying, okay, what is this price at a given day? Well, that's not a lot of information, right? We don't know what causes this price. We don't know what factors influence this price. So what we do is we start doing something called feature engineering, where we look at other markets, other indices, and say, okay, what is the behavior of something like gold and Bitcoin, or crude oil in Bitcoin, or all of these other factors that there may be hundreds of thousands of, and start looking for relationships, just like Steve said, where he says, okay, you might see crude going up and Bitcoin going up at the same time, and while gold's going down. And please do not take these comments as any real dynamic. These are just examples. So you should see a bit of randomness in this market, and that's what we call stochastic behavior. It's not completely random where it's you just throwing darts against the board hoping to hit a point, but there is a general trend, and then there's some randomness associated with it. And what you're trying to do is you're using other commodities and other indexes to help quantify the uncertainty on what you're going to behave like tomorrow. So I want to hop on exactly something like Steve said. So he talked about all of a sudden, and correct me if I'm wrong, Steve, that this morning or yesterday you started seeing crude down, gold down, and people just liquidating everything. And that is something that is completely bizarre in a data science standpoint. Because typically you see these micro behaviors between these two relationships that we say covary, i.e. one goes up and the other goes up, one goes up and stays the same, one goes down and goes down, or there's some range of behavior. So what we're doing here at CoinGenius is specifically looking at the factors that led to all of the sudden gold dropping, crude dropping, crypto dropping, my 401k dropping, all of these different factors, that raises red flags, right? And Steve, correct me if I'm wrong, is this an example of everyone liquefying everything? Yeah?
Yes, and Russ, I'd like to add one point, and this is something I've mentioned with Christina and others for, I guess, basically the better part of a year. There's actually one index, or I don't even want to say asset, but one measure that is really the ultimate measure that I look at for times of stress, and that's the VIX, the S&P's volatility index. When you start to see, or when anyone starts to see that go from, I believe 3 weeks ago, I said, be wary if the VIX gets over 25 for more than 2 days. Like, I'm an option person, followed Black-Scholes, did a lot of everything from floor trading to exotics. And when I start to see volatilities get into, I look today and the VIX was down 17% to only 55. It's like, wow, we're in a 70 VIX environment where a Dow 1,000-point move is seemingly the norm for the past 2 weeks. Yes, I agree with you 100%. There usually are some longs and some shorts of some fashion in most, I guess, professional portfolios, whether that's long equities, short treasuries. I'm not saying that's a good hedge, but you'll see some blend of longs and shorts. And when you start to see just the liquefying of markets just melting, then yes, I agree with you 100%.
Awesome. And because we typically see behaviors, right? So if crude starts to go down, there might be a slight delay before another asset goes down, right?
That would be correct. And when, like I said, when you see them, when you're seeing crude, I guess that was Monday or Sunday night, $10 the limit in crude during the day. When I saw crude essentially open limit down on Sunday night, because, and keep in mind when I say because, that's because the they were never been sure exactly who they is. At one point I was told because I spoke on Reuters that I was part of they, but I don't know. I never really wore that name tag or anything. So I think that, as far as I know, Saudi Arabia and Russia haven't actually sold excess. They've said they're going to do more, but again, that's simply talk. But in times of fear, sometimes words can be more frightful than actions.
And that's very important, and that's the point I was getting at, because most mathematical models nowadays will look at, say, the behavior of crude going down, and we'll say, let's come up with some fancy neural network architectures and see if we can start predicting what other assets might follow that trend. But they're missing a key point. They're missing fear. They're missing the idea of the human aspect of, hey, now we're getting to the fact that this is my 401k, this is my kids' college education, this is my retirement. I do not want to start losing that. So what do? They start reading news articles, they start tweeting, they start posting on Reddit, they start texting. So that's a vital, vital source of information to help make our forecasts and our metrics more robust. So some of the novel approaches that we're doing at CoinGenius, specifically involving AI, is looking at how we can extract the sentiment, or how positive or negative an article is, a conversation is, a tweet is, and how can we look at that from a variety of different lenses and in a contextual base, not just looking for positive words or negative words, but really creating a robust understanding of the general sentiment around specific assets and how those sentiments of those assets correlate with keywords like pandemic or Saudi Arabia or oil, and looking at this from a linguistic and human perspective. So the goal of our problem here is to take this highly contextual human emotion, be able to create an AI algorithm that will help understand and classify the regimes that we're in, that we can then give our users at CoinGenius the idea of, hey, this is the general sentiment of what's going on here with crypto, or here's what's going on here with oil. From that, what we can do is, once we have a means of quantifying those metrics of sentiment, we can plug this into more robust generative models that involve market prices, that involve a variety of indices, that involve historical data and historical keywords and what the market was doing, say, in 1928 or 1918 with the Spanish flu. Being able to develop a robust understanding of the natural language processing framework, or NLP, i.e. what's the emotion around the current market regime, and secondly, how is that correlated to what we're actually seeing in the market? And these are some of the highly, highly challenging problems that we're tackling here at CoinGenius, specifically involved around contextual learning. And on that, I think I'll turn it back to Steve and Christina, just to give them a bit more understanding of, hey, this is why we care about natural language processing. This is why we care about AI. It's not as a way of saying, okay, my car is going to take me here tomorrow or predict the spot stock exactly, but rather using the AI to understand human sentiment to help better forecast what we are either certain about or uncertain about in tomorrow's regimes.
Well said, sir. I'd like to add that there's a third problem there. And that third problem is that the Sentiment in the English language, and we're just starting in English, we'll move to other languages after we get this correct. But the sentiment in the English language is different than the sentiment when you use those words in the vernacular and jargon within the trading realm. Steve, if you can talk a little bit about, just off the top of your head, some of the phrases that mean certain things and why Russ has such a tough time to actually categorize all of these and be able to pick up on them in the intelligence engine.
Sure. I guess I would start with a kind of off the cuff comment that I have a certain skill set, and when I first met Christina, and I heard about the opportunity of working with an AI engine and people that have data science backgrounds. There's things that I'd always wondered, where I would be very interested, even in the future, to look back at how many experts there were in cryptocurrency in January of 2018. How many YouTubers were telling you, this can't go down, this has to go up, using definitive words? Because in my mind, the only person that can use definitive words is God. So when I start hearing this has to, this can't, always, doesn't, don't, won't, those are usually indicators that there's a tide turning. I can't, like I said, I'm more of an old school trader with technicals, and I have the track record to back it up, but I don't have the data science, or I didn't previously have a data science type team and people like Christina and Russ and Jeremy to help quantify those at a much deeper level. I guess some terms that may be unfamiliar is pulling the ripcord, blowing out, they got margin called, tap on the shoulder. No, those terms such as tap on the shoulder may simply mean you got to tap on the shoulder to eat. But in the equity world or fund world where I come from, tap on the shoulder generally means get out of your positions or come to my office and you're not coming back to this office. Things like pull the ripcord. Well, that would generally identify with a parachute, right? That's what most people think. That means we're in trouble, get out now. And I guess there is a lot of other ones. Limit down, that may not be picked up by certain AI or NLP engines, but in my opinion, or from what I know, limit down is what happens to futures markets when when the circuit breakers hit and they're literally not allowed to go down any further in a set amount of time. That could be $10 in crude oil, for example, during normal trading hours of, and other, I guess, words like that. But those would be a few just to give you an idea.
Yeah, and I think what you're hitting on is that there are lots of different contexts for these words to come up that most natural language processing algorithms don't pick up. What we're doing uniquely here at CoinGenius is devising a specific natural language model geared around the trading and crypto trading markets such that our AI engines can pick up on the sentiment revolving around those types of terms that Steve's picking up, right? Because if we were just to pass this through Google's natural language processing and say, okay, this is positive, negative, or neutral, most of those times it'll probably be coming up with neutral because there's not a lot of strongly negative words. But what we're really doing unique here is looking at the dynamics of both the market and the actual verbiage of tweets, social media posts, investors, experts in the finance world, and news articles to develop a novel crypto and trading language model that will be the foundation of all of our future metrics coming out of CoinGenius.
Thanks, guys. I'd like to add just a tiny little bit here. And now's a great time to use one of our favorite jokes at CoinGenius, which is we love to quantify things. And Steve is the greatest example of just kind of giving us so many metrics that we have to watch all at the same time. Just as a heads up to our audience, CoinGenius is doing a lot more than just the market calls as well. We find that the entire industry of crypto and blockchain has fragmented and conflicting data. And so what CoinGenius has done is we've basically vetted and aggregated the best 10% of it and brought together all the things that we find meaningful and the data providers that we find meaningful so that more people can be in this space. We're also providing what I call a democratized database of Wall Street insights. So basically the same way that we look at it and we're automating Steve's brain, we're turning that over to the public so that everyone can have these advantages that is usually just saved for the 1%. There's also another component of the intelligence engine that's actually very closely tied to the marketing engine. And that is, which is separate than the sentiment engine that Russ has been talking about, because we like data science at CoinGenius. But the intelligence engine and the marketing engine really cohesively go together to analyze project by project about what the technical components, the network security, the people, the investors, the influencers, and all of the moving data points that show progress for an organization to help bring transparency and credibility to this industry. So there's a lot more than just market calls. And I would also say that every one of our data points is indicative for mining strategies as well. Because if you don't know, there's a lot of inverse correlations of what traders want to see as price movements and what miners want to see as price movements. And now's a good time to plug that you can talk about all of this with Team Genius on our live premium CoinGenius Discord, which I will post here with the video. So that being said, I'll turn it back over to you guys for any last comments about what we're doing at CoinGenius and basically how crazy this week was. Russ, I can't help myself. Trump was supposed to be on at noon today, and there was so much chatter in all the forums today, and all I've heard is, should I short? What should I buy? Da, 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 da. And I'm going, it depends on your strategy. You have to know what your strategy is first. And guess who I learned that from? Mr. Steve Kwan, right? So the sentiment thing that comes on is very real. And if we're listening to all of this chatter, what do you anticipate us kind of honing in on to have our finger on the pulse?
Yeah, so I think what we need to do is we need to step back as a society and do something that humans are not very good at, is understanding data. What we want to really sit back and do is avoid all of this alarmist rhetoric and things that we actually should be concerned about and start looking at how the data supports a given belief or a given hypothesis or not. So what we're really doing here at CoinGenius and what we're going to be building out in the future is that perspective of, first, how do we aggregate and clean all of this data into meaningful data points that we then can use to say, yes, this supports my given hypothesis or not. So frankly, this week has been a mess, and I'm not terribly optimistic that within the next 2.5 or 3 weeks, given the experiences we have seen coming out of Italy and Europe now, that we're still going to be headed in this negative regime. There are probabilistic outcomes that might say, yeah, we could see an uptrend, but this is where we have to start talking about the exact phrases that Steve talked about earlier, is that you cannot deal in absolutes. We live in a probabilistic society. There are some outcomes that are highly, highly likely, right? The outcome that for whatever reason, tomorrow the sky will completely go black is probably a 0, right? But it might not be 0. It could be 1 times 10 to the negative 100, right?
That's why I like Ross.
Yeah, mathematicians rarely use big round numbers like zeros. That's too absolute for a data scientist.
So what we need to really start doing is understanding the likelihoods and say, okay, is there a non-zero probability that things will be start turning around tomorrow? Sure. But given what we've seen, i.e. the data, the historical data in a qualitative sense coming out of both the US, Europe, and China, and specifically as we watch this pandemic evolve, I'm a Bayesian. I'm going to specify my prior belief. My prior belief is that and this is for the next couple of weeks, and to really just, not to give advice to our users, but really sit back and take a look at your current portfolios. Take a look at your current investments. Are you someone who's like me in the millennial age group that doesn't have kids, that's not particularly worried about college or retirement right now? Can we weather this? Are you someone close to retirement, right? That's typical, investment advice, but specifically what we're trying to do here is we're not trying to beat the game. That's not what we're doing here at CoinGenius. What we're trying to do is the scientific principle of being able to understand the dynamics of the crypto system to allow our users to make the most informed decisions they possibly can from our models and data and from their data.
Agreed. I'd also like to note that something that's been coming up a lot on the Genius Wednesday calls is that we live in a digitally connected world now. The social media aspect is completely different than it was in 2008. And when people are in pain and they're hurting and they can't pay their bills, you're going to know about it, and you're going to be able to pick that up digitally with, just the monitoring that we're doing at CoinGenius. So I would brace yourself that it might be longer than just 3 weeks. Just prepare, be safe, be cautious, be educated. That said, Mr. Stephen Kwan, any last thoughts before we wrap up here?
Sure, I'll make it fairly quick. I know sometimes I can be long-winded, but in the middle part of my career, I had the opportunity of working with some of the, I guess what I'd call brightest guys I've ever worked with. And there were just a few sayings that they always would put in my head in times of stress, whether it was for me or for them or for the firm or for markets. And it's, are you comfortable with your position? And it's not my business what your position or the person that's listening's position is. I don't know. I don't really care. It's not my business. But if you're saying no, if you're not comfortable with your position, whether that's 1 cent of something or whether that's $100 billion of something, that registers in my brain. If I'm not comfortable with it, then it triggers a light that says, maybe I want to reevaluate this. And I guess the second is, am I staying true to my strategy? If I'm a 1-minute algorithmic black box trader and all of a sudden I go, well, I'm just going to hold this one a little more, it's going to come back. Those are two totally different types. And in my expertise, trying to modify strategies that have worked for years or decades or months in a time where the VIX is 80 may not be the most profitable time to kind of backtest those with real money in real markets that are 10 or 20 times more volatile. And finally, I think that just looking at the liquidity pool of whatever someone is in, whether that's crypto, crude, commodities, Pokemon cards, as my son is. I don't know if you can see it back there, but whatever the market is for whatever asset you're in, is there a bid? Is there an offer? Can you see where the proverbial pain ends? If I'm short A and the market is 1 bid at 10, I know that much as I may not like to, I can pay 10 and lose X amount. Or you can get out at 1. It's when you start to see no bid and no offer, that's when markets get scary. So those would be my 3 points. And like I said, I try not to give advice because many of the listeners and viewers don't know me and I don't know them. So I don't know everyone's situation. And finally, and kind of as Christina alluded to, when people are put with decisions, okay, you need to sell X or you're not going to eat. Well, if they don't eat, they're not coming to the desk the next day. So that price that you think might never happen or can't happen, well, it can. And as Russ said, the probability might be 0.00001, or as they say, 1 Satoshi in Bitcoin terms. That's an infinitesimal number, but there is a chance. I think, what famous person said that? I want to say Jim Carrey said that in Dumb and Dumber. He goes, so you're telling me I have a chance? And she's like, yes, I think so. I know that's probably not politically correct or very Coin Genius-like, but that's my closing statement.
Hey, but it is very Mr. Steve Kwan. So thank you, Professor. Much appreciated. All right, Russ, final thoughts, and then I'll wrap it up here.
No, I think I'm with Steve on this one, and it's the best to assess your own personal situation. Changing with a highly volatile market and with new strategies without back testing is not something I would ever do as a data scientist, right? Because it all comes down to your belief, right? So if I believe that tomorrow it's going to go up, my first question is, what would you tell me to support that? And if you only have 2 data points to support that, then I probably won't believe it. But if you have lots of data points and whatnot, that's something that you would take more seriously. And that's what we're trying to provide our users here, is just the most robust data that's constrained in our uncertainty estimates and our indices and our metrics, not to dictate what the users should do, but to have that just be more support for their belief on what they should do or not do.
Awesome, thank you. I would like to echo that in that, you know, most of us at Coin Genius are on some level, you know, math and science driven. We like the data points. We like to be able to analyze things and test it and let the math and the data do, you know, the heavy lifting for us and speak the narrative. The last piece that I will mention to the community out there is that I'm aware that I'm in the minority where I actually do find data sexy. I think that we can solve the world's problems with, you know, data solutions and AI and blockchain interoperability. But I understand that not everyone backs those beliefs, and that's okay. But what we have learned in, you know, in our careers is that drowning in data is not a solution. You need to bubble that up to information, and that needs to be tailored to the personas of the people that are looking for that kind of information. And so we built a very complex, what's called CRM, which allows us to serve a unique experience to you and let you hit the mute button on the noise, so that you're not drowning in data and you can get your information points that are meaningful. We're also doing a bunch of educational information and partnerships so that you can onboard into the space and actually understand the landscape. So if you have any questions, you guys can always reach out to me here. You can find us on our Discord. You can reach us on the website at info@coingenius.ai. And you can find me on Twitter and in the Discord at girlgeniusxv. And if you guys ever need anything, just give me a holler. That's it for today. Thanks so much for joining us on Blockchain Versus.